Oh man, a quick weekend update as the banking crisis continues to get worse and worse and worse. You can see here European banks are getting absolutely demolished this week. Many down 18-90%. of the biggest one to focus on today are Deutsche Bank and Commerzbank, two of the biggest banks in Germany, struggling to the downside. Remember, we monitored Credit Suisse going back to the last quarter of 2022, pointing out issues. Around the same time, there were similar rumors for Deutsche Bank, and now you can see their CDS swaps, which is their credit default swaps. I used to trade this in traditional finance. So funny how I've definitely got PTSD. I remember saying at the end of last year that, guys, this doesn't feel normal. This feels like a financial crisis. And remember, this could be very, very positive for Bitcoin. Bad for the traditional finance, really bad for traditional finance. But for Bitcoin, this could be the safe haven, just like how gold is, but a much better version of gold, where people flock to in times of difficulty. And when the existing establishment is failing, when you're seeing creaks at the helm, when you're seeing 100 billion in deposits poured from banks, okay, yet officials are still saying, oh, it's sound and resilient. Europe still did 50 basis point rate hike. Jerome Powell in the US still did a 25 basis point rate hike, despite banks struggling. This is why you're seeing credit default swaps rise. For those who aren't familiar, this is something you take out as an insurance against these banks defaulting. So if the price is going up, more people think they're likely to default and then insuring against that risk. Similarly, Charles Schwab, a American bank, credit default swaps rising. And if you look at it, the red one is Credit Suisse. So we are miles away from the premiums we were seeing on the CDS levels for Credit Suisse, but the spike is visible and you can see it here for major banks, including SocGen, UniCredit, and Deutsche Bank. This European banking issue is continuing to get worse and worse. And again, I want to put this stuff into perspective. Washington Mutual, these are some of the biggest failures we've ever seen. This is Washington Mutual as a size, that's Silicon Valley Bank, that's Signature Bank. Right? We've already had a huge financial crisis. This is not normal. But if Deutsche Bank was to go into trouble, who's in the order of above $1 trillion in management, that's going to eclipse this. That's going to be bad. Even with Credit Suisse was just about at that size that UBS, a well-run European bank, could swallow them and absorb them and maybe get away with it, right? That's what they're going to try to do now. Get away with it by absorbing them. But if something was happened to Deutsche Bank, who is going to absorb them? They're too big to fail, right? They're systemically too big to fail, and they will have to be bailed out. So all of this excuse the government is making, oh no, we're not printing money, and we can see the assets on their balance sheet continuing to rise. We made a full video about this yesterday. If you haven't watched that, go watch that. Really important video yesterday, which a lot of you are missing out on liquidity, how they're pumping liquidity into the market, and how they're doing undercover stealth QE. Yes, stealth QE, okay? So we can see that Deutsche Bank would eclipse this. And then I want to show you this, which is these are by year group. It's a bit difficult to see there with me. Let me just pop me out of the way so you can see that. There you go. This was 2008 crisis, this skyscraper here. Already, we are far bigger than any year since 2008. And it's so crazy that at the end of last year, I just had a feeling that we were heading into something deeper than a recession. When people were saying this is a recession, I was like, guys, this feels worse. This feels worse. It feels like a financial type crisis. Now, the difference between 2008 and where we're at now is twofold. And this is where things get interesting. One, the Fed know how to deal with this scenario. How do they deal with this, guys? What have they figured out? They turn on the money printer. So we know that's how they're going to deal with it. And two, what do we have now? We now have Bitcoin. In 2008, we did not have an immutable, decentralized, perfectly balanced crypto coin such as Bitcoin, which has been battle tested for now the best part of 14, 15 years. Right? Now we have that. We're ready for that. And it's going to be, in my opinion, an awesome time to be invested in this asset class. Not financial advice, of course. But for me, I couldn't think of a better asset to be in right now. When I'm seeing the banking sector creak at the helms, when I wake up in the morning and I see exactly what we knew and we've been shouting about since 2008, that they haven't learned their lesson. They're going to do the same things. Now, I just sit here and look at Bitcoin at 27,000 and think this thing is set to explode. Now, of course, on the short term here, you can see that there are some downsides, right? There are some downsides. We are seeing here on the hourly chart, we are downtrending. You can see the RSI fall to the downside. You can see we fell from the symmetrical triangle pattern. But longer term, who really cares? For me personally, I'm looking at 26,000 as an area to buy the dip. I'm also looking at 25,000 if we get a bigger dip to buy at those levels as well. So those are the key levels I'm looking out for here to add to my portfolio. Let's also take a look at the dollar index. Important that we look at the dollar index as well. And you can see the dollar index did have a big spike yesterday on the 4-hourly chart. Let's put that to the daily, and you can see they did open up a big strong day yesterday, up 0.5%. But again, downtrending, right? Downtrending, and that's what's important here for Bitcoin. We're inversely correlated to that. If you take a look at Fear and Greed Index, you can see the Fear and Greed Index is sitting here at 64. There is greed in the markets, right? There will be greed in the markets because people will start to realize that crypto is the asset they want to be in. When the banks are creaking at the helm, what's going to happen? The Fed are going to have to loosen their monetary policy. They're going to have to pause their rate hikes. They're going to have to start cutting their rates, and they're going to have to turn on that money printed. If you haven't watched my video yesterday, you've got to go watch that. Secondly, if you haven't learned TA to make sure you're building your portfolio properly, when's the best time? Are you going to wait till Bitcoin's at 100,000 before you do anything? Ijaz.uk/TA is completely free. Who else has made their whole TA course for free? I was in traditional finance learning this stuff over a decade. Guys, it's completely free. Ijaz.uk/TA. If you can't take a couple of hours to go work for a course which is free, I don't know what to say to you. You're going to wait to the bull market. You're going to wish you knew all these patterns, and you're not going to know them whatsoever. Let's switch on over to the weekly chart now, and I do want to show you on the weekly chart, where is Bitcoin at? Because Bitcoin, if we can break through this difficult level, which is 29, remember there's resistance from 28, 29 up towards 32, then we can get a big move up towards the late 30s and early 40s. You see this gap up here? That could feel very, very nicely. Let's bring out the EMA ribbon. We are now nicely above our EMA ribbon. Even if we have a bad week, it's not the end of the world. Come retest your EMA ribbon, bounce with vengeance off it. Let the RSI reset, build some momentum for the next phase. That's what's going to be important right now. Guys, as always, don't forget to smash all the likes. Don't forget to subscribe. Check out the video here where I talk about various other interesting things, including the liquidity crisis and why this is the perfect time to be loaded into the best asset class ever. Thanks for watching, guys, and I'll see you in the next one.